With spreads from just 0.8 of a pip, ActivTrades sponsors the Forex Report.
Well, as we were so close by, we thought it rude not to pop round the corner and have a little chat with Ricardo Evangelista from ActivTrades. So I popped in today to have a coffee with Ricardo from ActivTrades. Ricardo, thanks very much for joining us again. So tell me, what's been going on in the foreign exchange market?
Thank you very much for making the effort to come along. It's lovely to have you here. Well, we've seen a follow-up on the trend from previous weeks. So the pound is getting weaker against the dollar, and the dollar itself is losing ground against some other currencies. For example, the Australian dollar, the Canadian dollar, and the euro. Last week, towards the end of last week, has also suffered some losses. This was mainly caused by an unsuccessful Italian bond auction that didn't go according or didn't fulfill the most optimistical expectations that we had. So yes, that's mainly it. So the three main currencies are sort of in a gloomy place at the moment.
So which currencies would you say were looking stronger in the medium to long term?
Well, it's always difficult to make forecasts in the medium to long term, especially in the current environment where there's events and news coming out every day that can have a strong impact. Also, we see that the main currencies like the euro, the pound, and the US dollar, they're all suffering from the underlying issues of their respective economies. So I would say that in the medium to long term, those issues will more than likely stay with us, and therefore the currencies are likely to suffer, the respective currencies are likely to suffer. I would risk a very wild guess that perhaps the Canadian and Australian dollars are currencies likely to do well in 2013. So in the medium to long term, we could look into those two as perhaps the star performers, because the other ones aren't doing as well, and also because the economies of these two countries are quite solid when compared against the Japanese economy, the British, American, and the Eurozone economies.
Sure. So if you're wanting to make a trade, a forex trade, in the medium to long term, how would you do that?
Well, technically it's quite easy. So the procedure is the same. You open a position, but rather than close it shortly afterwards or a couple of days afterwards, you keep your position open for as long as you think it should stay open. From a logistical point of view, that's pretty much it. There's some financial implications.
I was going to say, how does that work? What are the financial implications?
Well, when you're trading a leveraged product, essentially that means that you're borrowing some of the capital for that trade. You're borrowing it from the broker, so you will be charged interest on the money that you borrow. And typically this interest is charged on a daily basis. So there's an overnight charge called the swap, which will be applied. So I would recommend that all traders out there looking to trade longer term positions, that they look into the swap rates that they will be charged, because
so it's like an interest rate.
It's like an interest rate. That's exactly what it is. And so some brokers may charge higher than others, so I would look into that.
Okay, well that sounds good stuff, all to be taken on board. Ricardo, thank you very much for having me this week. I'm loving this coffee. I might have to come back next week.
You're welcome to come back anytime.
I'm firing on all cylinders. It's so strong.
No,
anyway.
Lovely to have you here.
Oh, thank you, Ricardo.
With spreads from just 0.8 of a pip, ActivTrades sponsors the Forex Report.